Hey there, my name is Greg Lamb, the Small Biz Doer. This is Lesson 3 of Accounting 101, Revenue and Expenses. So, if you've gotten anything from the previous lessons, it's that debits equal credits and assets equal liabilities plus equity. What you didn't hear about was revenue and expense accounts. They make up another formula in accounting. Another formula? Yes, another one. The formula is net income equals revenue minus expenses. Net income is the money that a company made, or if it's negative, the money that a company lost. If you remember, equity actually includes the money that is made or lost by a company. So net income is a part of equity. When your revenue increases, so does your equity. When your expenses increase, your equity decreases. Let's go over an example of when a business receives revenue. Say that Akko sold $1,500 in her cafe and the money was deposited into the bank account. How do we enter that in? We can safely assume that this is revenue. By making a sale, we increase our revenue, which means we need to credit the revenue account. So we choose the cafe sales account, enter in an ID of 3, and put $1,500 for the amount. The second part of the equation is that we deposited the money, $1,500, into the bank account, which is an asset. Do we want to increase our bank account balance or decrease it? Since we are receiving money for something we sold, we increase it, which means we need to debit it. So we choose the bank account, enter the matching entry ID of 3, and put $1,500 as the amount. Easy peasy. Now let's verify this entry. If we did everything correctly, our revenue will have increased by $1,500, as well as our assets. And yes, we now have more assets. It increased from $9,000 to $10,500, and we also have more revenue, which increased from $0 to $1,500. But there's also something else that happened. Remember the accounting equation? Assets equal liabilities plus equity? Well, our assets increased by $1,500. So that means that our liability or equity had to have increased by $1,500 as well. Because our revenue increased by $1,500, so did our net income. This automatically increased our equity by $1,500. Anytime we adjust our revenue or expenses in the accounting equation cheat sheet, our equity is automatically adjusted. Let's try an example of an expense now. Say that Akko purchased $125 worth of office supplies using her credit card. How do we enter that in? We need one transaction increase in our expenses and one transaction increase in our liabilities. Let's start with the expenses part. To increase expenses, we debit it. We choose the office supplies account, enter in an ID of 4, and an amount of $125. Because we debited an account, we need to credit one. So we credit the liabilities account. We choose the credit card account, an ID of 4, and $125 for the amount. Crediting the liabilities has increased the amount of money we owe. We successfully increased our expenses by $125 as well as our liabilities. Here's a recap of the keywords and concepts we just learned. We learned net income, and that net income equals revenues minus expenses. We also learned that revenue increases equity, whereas expenses decreases equity. And net income is a part of equity. In the next lesson, we'll go over the 5 main types of accounts in accounting. If you go to smallbusinessdoer.com, you can download this accounting equation cheat sheet, as well as do some exercises and quizzes. All right, I'm out of here. Catch you on the flip side.